smiles every time you come around.
We are back with another deal of the week breakdown, and this one is a continuation of literally what my clients are always doing. I want you guys to see how we're able to get these deals through to the finish line while getting my investors to come in with very minimal money out of pocket. Now, my goal is always to be able to do this with as little money out of pocket. You guys know that I've talked about this if you've seen any of my other deal of the week videos. If you haven't, go check those out. But we're always looking to find the way that we can get less money out of pocket or get the seller to cover a large portion of closing costs. This deal, however, was a very competitive deal. It's a amazing A-frame property in the Poconos in Pennsylvania. The Poconos is a very popular short-term rental market that a lot of my investors have gone to, primarily because of the fact that it just is good at driving revenue, but it's also a mountain market where you can get more bang for your buck. And so I've had a lot of people who've gone to that market. They've just been able to want to continue to reinvest their money, and it's proven to do really well. Jumping straight into the numbers, this property is a single family house, but it is a very cool A-frame property. I wish that I could show you guys the pictures. You would be able to see it and be like, this thing is outstanding. I would even book it myself for an Airbnb. It's amazing. They got a phenomenal deal on it, but it was only on the market for 15 days. So it actually was like very competitive as far as us making sure that we were able to get it under contract, and it even overappraised too, which is amazing, which I think is, who doesn't want that? It sits on half an acre. It's 2,500 square feet. It's a 3-bedroom, 3-bath. So it's a pretty big A-frame cabin. We ended up doing conventional financing for this property. So we did our super famous conventional 10% down second home loan. You guys know that when we talk about conventional financing, there's 3 different types of occupancy, which is basically what you're telling the bank in how much money you're coming in with for down payment. So the first option is 5% down. Well, technically 3 to 5% down if you're moving into it as a first-time home buyer. The second option is a vacation home loan, which allows you to come in with a 10% down payment minimum. And then the third option is an investment loan, which comes in with a minimum of a 15% down payment. Now, these clients qualified for it, so we were able to do the 10% down. They had a credit score that was over 700, and so it actually put them in the better pricing brackets as far as interest rates are concerned. And so the second home loan allows them to do the 10% down. We said that it was a single family home. This property ended up appraising for $695K. Literally cannot type today. $695K. Purchase price on this property was at $689K. And then down payment ended up being 10% down. So that was at $68K900 for the down payment, which very relatively minimal out of pocket. Now, we got an amazing interest rate on this property. We actually ended up locking in the interest rate at a 6% in a market where interest rates were like 7.5%. Now, for this reason, it was actually much more expensive. They mainly just wanted to get it as low as possible and then not have to worry about refinancing later. So you guys will see that the closing costs were a little bit more expensive, but it was for that reason. Principal and interest on this came in at $3,722 with 67. Homeowners insurance came in at $159 with 8 cents. Wasn't really that bad. Property taxes were higher. Property taxes in Pennsylvania are similar to other markets like Texas, where it's much more expensive, unfortunately. So $633 with 85 cents for the property taxes. Because we were also doing less than the 20% down, we ended up also having monthly PMI. If you guys remember, PMI is where you're paying private mortgage insurance to the bank, essentially for having a policy for the bank in the event that you default. So that's always going to be in effect anytime you put less than 20% down on most traditional loans at that. And so that came in at $124 with 18 cents. That leaves our total at $4,639 with 78 cents. Now, they're estimating to get quite a bit of revenue on this property, especially these A-frames, and the uniqueness of the deal has the ability to actually, drive way more revenue. And I think that's ultimately what we're going to see here with this client. So closing costs were super expensive, not only because of the time of year, but also because Pennsylvania has something we call transfer taxes. Transfer taxes are basically what you pay to the city or the county where you're purchasing, where it's essentially money that you're just paying to them for doing a deal there. For example, Oakland, California has a transfer tax where you actually have to pay 1.5% on the sale as the seller, and you also have to pay 1.5% as the buyer on the buy side. So it's just less ideal, but it's one of those things that exists. And so that made it more expensive here, plus the fact that we also paid for that 6% interest rate. Total closing costs were at $63,000 950, which is significantly more than what I normally estimate on this kind of loan. I typically suggest estimating about 4%. In total, we came in at almost 10. It was just way more money. Unfortunately, we didn't get any seller credits negotiated on this deal. I wish that we could have, but the fact that we needed to get the property under contract quite fast didn't really allow us to do that. And so there was no adjustments here either. Total out of pocket ended up coming in at 132,940. Now, if we think about it this way too, this market is one market that actually requires people to typically come in with larger down payments. A lot of my investors in this market in the Poconos are typically doing 20 to 25, even sometimes 30% down to be able to close. The fact that we were able to get them in with 10% down was really the moneymaker. They're going to be able to save a lot more of that money to put it on furniture, design, repairs, etc. That's the name of the game. You know, we want to be able to limit the out of pocket, save as much money as possible, reinvest that into the deal, get as quick to cash flow as possible, and then write it off at the end of the year because you get to use the STR tax loopholes. You get to save money on taxes and continue to go buy more real estate. So I hope you guys found this deal of the week informative. Make sure you like and subscribe to the video. I appreciate you guys continuing the support. If you haven't seen my other deal of the week video, check that out here or here. I will see you guys in the next deal of the week.
Every time you come around.